Hey everybody, this is Dennis Wilborn, founder of Active Trend Trading, and today's drop in the market of 5% or more made you want to almost pee your pants, then you're in the right place. Hang on, we're going to share with you very quickly what took place. If it's your first time joining us on YouTube or any of the other channels, please follow us and or subscribe, hit the bell so you'll be notified of any new content that we put up. So let's take a look. What the heck happened? I want to basically take a look at a couple of different things. One is the market dropped like a rock today. It was down. The Dow itself was down almost a little bit, almost 1,800 points, which is a lot. We take a lot, anything to be apprehensive about at this time. The only concern is what kind of negative formation have we put in place? Do we have to be concerned? Do we have to be worried? As we can see, hey, active trend trading is banging it out this year. We're up 21.72% as of close of business today. We're over the S&P 28%. As you can see, the S&P, the Dow, the Russell, all in the red. NASDAQ, only indicator that is only index that is in the green. I have to ask you, do you have a plan B? What is your plan B? You may be a stock, you may be one of those buy and hold kind of persons. And at what point do you say, you know what, I'm going to take my profits, I'm going to go sit on the sideline for a little bit. Hopefully we'll be able to show you a little bit of what's going on in the three indexes. And so let's jump into it. Yeah, clearly this guy has a plan B, and he wound up walking away with it. While walking away from this, his engine, shut down. He walked away and was fine. But dadgummit, in everything, you got to have a plan B. Let's take a look at what is going on with the market. As you can see here, I'm looking currently at the S&P. One of the things I find very interesting about the S&P, let me get my drawing tools up, is a couple of different things. One, we came up in the S&P to past resistance, right there. Right there. What was that from? Well, that was from a resistance area that was back in the, that showed up back in first part of the year, back about 127. We came up, we hit that resistance, and then have now rolled back over. This could be almost considered an island top where you have multiple small spinning tops. That is a candlestick formation, and then a gap down. Big gap down today. Why did we gap down? Increase of cases of coronavirus as the herd mentality takes over. I'm just saying it. This is what the charts are basically saying. They don't like that uncertainty. All of this move that we saw from about, this was back here in March, early March is when the things started cooking back off. It appeared that we had a good handle on getting the coronavirus, the COVID-19 virus turned back around. We went into a nice series of higher highs, higher lows, and then we kind of crapped out, almost hyperbolic, not hyperbolic, but exponential, up, shooting way high above the moving averages. And so what happens when you get that? You have a tendency to revert back to the mean. In this case, it appears as if the mean that the S&P is going to revert back to is about the 50-day moving average. Stopped almost dead in the water right here at the 200, just barely above it. We crossed back below the 200. That could be a negative item, which could set us up for further downside. The way I want to look at trading the S&P is basically I don't want to trade the S&P. Show you the weekly chart on the Qs. Qs, what's going on there? The Qs are the representative of the NASDAQ, as you can see, and I want to basically take a really good look at what's going on here. We can draw a trend line we can basically draw a couple of trend lines. One, we have this trend line. And yes, you do get situations where you have trends within trends within trends. So that's one trend line. 1, 2, 3, 4, 5 hits of the trend line. What is the moving average that the NASDAQ has been respecting? The 20-day. Price actions fell almost directly to the 20-day moving average today, and basically have not bounced totally, but clearly are showing the signs that that's where it may want to stall out. This steep dive here on the momentum from its highs, a steep dive back below the positive 42 level, that could be looked at as being a very negative sign. Again, the candlestick pattern that we see today could be considered as an abandoned baby type top. Although we don't quite have a gap up into it, it's close enough. And we certainly have a gap down, and then the sell-off just continued throughout the day to drop lower and lower. Let's roll over and grab the weekly chart. Let's see if I can. Now, as we see on a weekly chart, what kind of issues do we have going on? Well, a couple of them that are just, I'll draw them to your attention. One, the breakout of this level at the 237.47 level is in the process of failing. This appears to be the sellers did come in and we're dropping down below it. If prices close around where they are today or anywhere in the week's body of this week's candlestick, what we'll have is a bearish harami on last week's larger candlestick. So we had a breakout, which in turn may turn out to be, as I wrote a couple of weeks ago, may turn out to be a fake out. So we'll keep that in mind. So that's what's going on with the Qs. And last but not, so Qs, I would be looking at Qs to kind of pull back into these levels. We can throw on a new Fibonacci, basically these lows here. Where might it go? Grab the fib from low high. Okay, a 23% retracement will be down here at past support. But I'm looking at more of a, if the uptrend is to remain strong, we need to turn around before we get to the 382. Look what's in the middle between the 23.6 and the 382. It's the 50-day moving average. If we break the 20, look for a retracement all the way to the 50. So now let's take a look over here at IWM. IWM, we had just broken above the 200-day moving average, spent 3 days above it, and then on the fourth day, we fell back below it and then gapped down today dramatically. How am I wanting to trade this? I'm going to basically look for any kind of a retracement. I will look to trade the IWM to the downside, look for any kind of retracement back up into this little box right here. This is the gap down. Any retracement back up into that area and or the halfway mark of today's candlestick could be a setup for a trade to the downside. So with that, that concludes all that I wanted to share with you today. Again, please subscribe to the YouTube channel. If you're watching this on Instagram, follow us there. Give us a nice thumbs up. Tell us what you think about this. Basically, we could be in for a considerable, interesting drop. I'll throw one last thing on here. And if you do not have a plan B for your trading, or just, you need to check us out at our YouTube channel, which is Market Tech Talk. Every Friday, join us for How to Make Money Trading Stocks webinar. So with that, thanks a lot for listening. Aloha. God bless everybody.